And natural gas once again failing to break past the highs from previous week has seen a sharp drop. In fact, we have seen it trading below 2.4, which was a good consolidation level, and it has gone till towards 2.3 and below level. Now, what to expect next week? Is it going to trade bearish from here, or we can see a sign of revival? We will see with the help of charts and indicators. I have told you earlier that this is still at the bottom, and if it continues to drop below 2.3 levels, certainly further bearishness can be observed, which might in fact take it till towards 2 and below levels. See, these are the long-term bottoms for net gas. Now, we will see with the details with the help of charts followed with indicators, and towards the end I will give you the trading levels and strategy for next week. Do watch till the end, do listen to it carefully. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon, which will keep you updated with the daily analysis for net gas. Now let's start. Now see, one very important point. It was trading in this bearish channel so far. Last week it did try to break out, creating a support at 2.4, but then it has started giving lower highs, and then a breakout is seen on the last trading session. Now certainly trading below 2.4, this was a consolidation zone. This is the breakout with a large bearish candle. At least now it is very clear that till the time it trades below 2.6, we should not consider this for a reverse. And going by the history of net gas, probably it can give you a gap down, and it may try to attempt and achieve 2.2, because see, once it trades below 2.3, the next support levels is directly at 2.2 and 2 levels. These are going to be the next strongest support zone, and this channel, this zone between 2.2 or rather 2.3 and 1.7, this has to be achieved once. It is achieved once. Now I'll be definitely watchful how it behaves within this zone. That is the first part. Now this is on the daily charts. It is back again. It has given a breakout. These are the two key observations from here. Now let's have a look at the weekly charts. On the weekly charts, previous two candles, lower highs, higher lows, and this candle has given a breakout. I told you very specifically, once it drops below 2.5 and 2.4, we may see a very good drop. It has in fact traded below 2.3. Now see, after a green candle, this is the first red candle. Probably there is a certainty that it can give you second and third red candle as well, which might take it till towards $2 levels, which is certainly the next stronger support. Here you can see this was a consolidation before it created a base here or bottom here and rallied. Now again, if it continues to trade below 2.3, first target is 2.2, and then we may see it hitting $2 levels very soon. Also, one must not forget that now the movement, even a 10 cents movement, see, let's say if it drops from 2.2 to $2 levels, that is almost a 10% drop there, and it has already erased lot much of its position, almost 70-80% since last few weeks from now, and it is searching for a bottom. It's still not found the bottom. Let's see if it continues to trade on the downside from here. Now let's have a look at the monthly. On the monthly chart, see, the candle started here. Several times I have told you, do not consider this as a reversal till the time it trades below 2.8 and 3. I have repeated it week on week, and now again I am telling you the reversal confirmation is only if it trades below above 2.8. Now see this, you can also look at the monthly charts here. 2.2 and this zone, first 2.4 was a very good support. It has breached 2.4. Now it is trying to look forward to 2.2 levels. This is again the next support level which net gas might be looking for, because below that it is only going to look forward to $2 levels. So first it has to sustain below 2.3. If it does, if it stays below 2.3, you can look forward to, you can expect that probably we may see $2 levels, and if it breaks 2, then certainly more bearishness will be seen. I will be looking forward to that if it continues to stay below 2.3 and 2.2 levels. Also, this is a third straight red candle, and if you can count the candle size, $2.5, almost $1.3, and if you count it to further half of its previous candle, probably 2.2 certainly going to remain a very good support, and hence if you see it trading below 2.3, you can again stay short and expect it to drop further. It will fall into this channel, which is a support zone, which we have seen net gas getting bounced back from these zones several times in recent past, either taking the support from here or from these levels. And this is 1, 2, 3, 4, 5, and this is the 6th time in last 20 years that net gas is achieving these levels, and hence you have to remain cautious at least for 1 week. Probably we may see it trying to achieve or trying to stay in this zone. Now we have seen the charts. Let's also have a look at the indicators. What do the indicators are suggesting? Yes, it is trading below the 20, 50, 100 period moving average. The 20 period moving average situated at around 2.6, 2.7 levels, which is a very good resistance. Now only if it stays about 2.7 and then 2.8, you can consider this for a reversal. Else probability exists that it can try to achieve the bottom of this channel again, which is situated at around 2.2 and $2 levels. That is the first part. So very important observation, 2.7 if and only if it stays above, and then 2.8. If these two are taken, then only you can consider that net gas has reversed. Also, it is trading below all the moving averages and trading with divergence, indicating little bearishness here. Now, one more important point is see the narrowing of Bollinger Bands. Bollinger Bands have narrowed sharply, and probably it will give you sharper bullish moves if it has to expand the Bollinger Bands and trade bullish from here. Directional movement, divergent and bearish. Stochastic, after retracing a bit, has again tried to drop and it has seen the bottom there. The MACD is in green, trying to converge again, crossover for a sell. RSI, which tried to come out of the oversold zone, is now again trying to enter into the same levels, indicating little bearishness here. Now look at the weekly chart. On the weekly charts, you can see this was the 20 and 50 period moving average. We have seen them diverging. We have seen it trading bearish since then. Now, in fact, the 20 and 100 weeks average is also trying to cross over, which is again a bearish sign. And now the zone here at 5.5 is the important resistance zone. Directional movement, divergent and bearish. Stochastic is extremely oversold on the weekly charts here. Probably a little revival has to be seen, but when, that is the question. Direct and MACD is still divergent and bearish on the weekly charts, and see it has probably achieved the bottom. See, the candle size is diminishing. It has to converge from here. Probably it can give a gap down on the first trading session in the coming week. We may see it trying to achieve the bottom there before looking forward to a bounce back or a revival. Hence, achieving the bottom, giving a gap down, it can try to revive again. Possibility exists because see the levels plus 1000 minus 1000, this journey is complete and a little reversal has to be there. Maybe it may take a week or so before bouncing back, or maybe this week itself, though we are expecting it since long, but it is still not willing to rise here. RSI on the weekly charts has also come to oversold levels, and historically, if you see, only fifth or sixth time in the history we have seen this on weekly charts trading at oversold levels. Now look at the month. On the monthly charts, indeed, it is trading below the 20, 50, 100 months average. 100 months is almost 8.5 year, and you can also see it is far above at around $3 levels, which yes, it can try to look forward to achieving these levels in near future. Also look at this, the 20 months average, 50 months average, 100 months average are now curving downwards, looking bearish. The directional movement, you can see, has crossed over for a sell, and this crossover has happened after a long time, after a couple of years almost. Stochastic has come to extremely oversold levels, and probably achieving those levels, it has to bounce back soon. Maybe it can stay there for a little while before trying to bounce back. So be still watchful and observant. As look at the MACD, this is crossing over, this is divergent, this is bearish. The same levels, watch out for my annual review for net gas. I have told you very clearly on the monthly chart, this is crossing over. This may bring little bearishness, but this is shown extreme bearishness here, and probably the candle size is heightened. I will wait for it to close of this monthly candle, where we may see it coming to bottom, and from there convergence can be seen either from the month of March or from the month of April onwards. It can take one more month before trying to give you a complete reversal. RSI is also looking down, but on the monthly charts, every rise is preceded by a bottom in net gas, and this bottom on the monthly charts still has to be there. I'll wait for this monthly candle to close, where we may see it achieving the bottom and retracing up from these levels. So now we have seen the charts, we have seen the indicators. Time for us to define the levels and trading strategy for next week so that you can make a good profit. Now see, before, when it was at $7 or $8 levels, $0.5 no trade zone was a good comforting level, because see, $0.5 at $7 to $8 of net gas doesn't mean much of the wealth erosion. But if you look at the current levels, if I give you a no trade zone for a half dollar, which means almost 25% of the range. Hence now we have to look into pretty nearby levels which almost comprise of 5 to 10% levels here. Though net guess this drop it has seen, it can revive up to the same speed, and hence we have to remain cautious. Considering this, now first let's talk about the levels to buy. And yes, if you want to learn this art of trading profitably, you should join my mentorship batch. The 20th batch starts in first week of March. Also, you can be part of my signals group. Reach out to me for more details on same. My Telegram and email IDs are mentioned in the channel and video description. Now, next week, I will recommend you to buy at 2.343 levels. Beyond this, you can expect 2.360. And if it breaks past 2.360, certain we may see it hitting 2.4. Now remember, once it starts trading above 2.4, it may bring little more bullishness, where the next destination which I will be looking forward to is 2.46, 2.48 zone. Now this is also a good level for it to you to watch out for. Beyond that, little more bullishness can try to take it for 2.52 and then 2.6 levels. Now 2.6, 2.65 and 2.7. Be watchful of these only, and then a reversal confirmation about 2.8. Sky is the limit about 2.8 levels. You have to watch out for these levels in near future. Specifically for next week, 2.6, 2.65 levels, you should be careful at those levels. You have to keep booking at let's say if you're taking a buy entry here, you have to keep booking your profits at each of these levels very nearby, but then profit is profit, and it is always better than holding it and wait for a loss. It can reverse any point of time, and hence you have to keep booking your profits and keep re-entering if you see it trading in the same direction, or put a trailing stop loss. Now on the downside, where I'll recommend you to sell is 2.295 levels, below which you can expect 2.28, 2.25, 2.231 and then 2.2 $2 levels. Now remember, 2 is again a very strong support. It can try to breach it once, but there could be a possibility of a bounce back, and hence $2 levels I don't see it breaking. However, these are markets, it can break strongly on the downside. First 2.2 and then 2.0. These levels you should watch out for, mark out for. Be careful. 2.2 definitely very strong support. Achieving these levels, giving a break gap down on this coming Monday or Tuesday or week opening, it can again try to reverse again, buy again, and hence about 2.2 certainly you can expect that we may see it trying to recover the gap or trying to trade bullish. At the same time, below 2.2, it will call for further bearish, where we may see 2.1, 2.0 levels. In this zone, any point of time, it can bounce back, and hence 2.0, 2.1, 2.2, these levels you should watch out for. Trade accordingly, trade profitably, trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship batch, join my signals group, watch the daily analysis as well. Thank you very much. Have a great profitable trading week ahead. Thank you.